We are live for another weekly update. Every Friday at 12 o'clock Pacific time, I go over the latest headline articles of the week. I also go over any sort of progress that I've made in terms of transactions, some that have closed. I always like to tell the stories of some of my clients. And then we'll do a deep dive in terms of the market update itself. You will see yourself what is actually happening with the market. To give you an idea, a lot of these articles are typically laggard. Now, there are some that are that may be forward indicators, and I will point that out. But otherwise, a lot of things are kind of things that I've actually already highlighted maybe a month in advance, because that's when, if you think about it, a reporter will look at the information, they'll make a report of it. But those are all using older data. So I can give you a sense as to what is going to be happening likely moving forward. But the big news of the week, and this happens every 2 months, is US CDC announces new 60-day COVID-19 eviction moratorium again. This is indefinite. I mean, unless COVID is actually gone for good, which at that point would bring like a crazy boom cycle for the US, but I don't think it would be. And so it's kind of almost going to be lingering indefinitely. If you think about it, they announced it to another 60 days. So I think that is to what, October? I think it's still October then. And so, yeah, I mean, by October, usually, like many of these issues, it seems like it's usually like the winter time is when it gets worse again. So by October, now I think even generally things are a whole lot better than before, but still, they're going to keep extending this indefinitely. So for those that keep waiting for this magical event to happen, I would say be cautious. There is always a price to pay for patience. And as you have seen throughout the year, a very significant price to pay. So I don't know how much of an impact this would actually have. And now it's been extended again. It's kind of ridiculous. I mean, it's just bizarre, because if you can see this, what's crazy is that there was a ton of money that was given to the local states, or to the states. Billions of California rental relief dollars left to distribute to tenants at risk of eviction. Well, because there's a moratorium, there is no risk of eviction. So it's like, okay, so the state doesn't have to issue anything. And so most states are having billions of dollars just sitting around doing nothing. The whole purpose was for rent relief. But if they don't have to pay for rent relief, it sounds like they may be doing potentially some shady things, because then they can do something else with that money if it doesn't have to be distributed later on. So really, really bizarre. There's clearly people that need help. There's clearly a lot of money to help people, but there's got disconnect in terms of, are they actually getting the money and they're getting it in a timely manner? But at the same time, I'm really mixed when it comes to this. And I'd love to get your thoughts. I mean, I'm sure there are people that are affected and they couldn't make payments. However, you see, and I personally know, a lot of business owners are having a huge difficult time to try to even gain people to work with them, whether it's waiters, whether it's staff members, whether it's a lot of jobs. Like, I'm trying to fill an inside sales agent position, and it's hard enough for that. So it's a tale of two stories, and it's really difficult to say, is it lazy? And it depends on which side you sit on. Is it just lazy because they have all this money that keeps going to them and they don't have to even pay for rent? So they're getting even lazier because now they don't have a cost to be worried about. I'm pretty torn about this. I'm kind of actually leaning one side. I think this is getting pretty ridiculous, quite frankly, of all these delays. But that's my own personal opinion. From generally, like I said, for the most part, most people can easily just get to work and start making payments again. But that's my personal opinion there. So other news, real estate, big Fremont Tech campus draws veteran buyers, site's value soars. 4-building complex is in a section of Fremont that's a tech and biotech hotbed. For those that where did Facebook grow their campus, which is in the Ardenwood area across from the Dumbarton Bridge? So this area has done very well. It's a combination of lots of tech companies have decided to expand just right across, because convenient. It's from a miles perspective, it's close. Obviously, the bridge itself is a different type of traffic, but it's very convenient for a lot of companies. San Mateo County will be the most expensive county when it comes to homes and when it comes to talent and when it comes to office space. But just right across the bridge is a whole lot less. I mean, we're talking about like maybe half the cost, maybe a third of the cost. It's like a really stark difference. And there's a lot of things happening in that area. It could be Ardenwood. It can also be in the Newark area. So just, it's all kind of proximity with one another. And as more and more grow out there, there'll be more and more companies that may say, hey, look, if they can do it out there, we can do it as well. So, and I know many of you probably work in this area, especially if you work at Facebook and you're not like on the engineering side of things. Newark is a big overflow and space for like admin related positions, non-engineering types of jobs. Now, what are other news? This also shows big signs of like, hey, look, people are pretty aware of the opportunity for a lot of these office space. So for those of you know, this is off of 237. This is the Micron building, Zscaler from a long time ago. People that are familiar, Brocade had this space for a long time. And the Brocade got acquired a couple of years ago, and then they eventually had it vacant for some time. And then Micron took over. I think they just may have moved from like San Jose to San Jose. I don't know if it has ever been in use because I think they bought it or they got the space a year and a half ago or so when COVID first started. But it's very important for you all to understand KKR is a very large private equity firm. In private equity firms, what do? They acquire space because they see an opportunity to add in value for that space. And so why are they doing that for these types of office buildings? Do they know something you don't know? Probably the answer is yes. So they're still very bullish on prime real estate, which is in the Bay Area. So KKR paid $535 million for the office space. Remember, these guys are, I don't know if they're vultures is the right word, but I would say they're opportunistic. And if they see opportunities in the Bay Area because of office space, because of all this commotion that things may not, people don't want to use space anymore, then I think it makes it interesting. Like these big money is now chasing this type of asset, type of property. Georgina, thank you so much for tuning in. It's always greatly appreciated. Hope you are enjoying the work. Now, home prices are still rising, but relief for buyers is coming. Price growth should fall to single-digit increases by June of 2022. I do not disagree with this. I think a lot of the bull run was initially. There's a lot of movement back and forth, right? I mean, a lot of panic, a lot of excitement, a lot of money earned and generated. Take a look at most people's stock portfolio. Like look at their companies, a lot of IPOs, a lot of money has been created and very little opportunity to actually spend it, right? I mean, most people can barely even leave the country right now to even go travel. Many don't even want to leave the country. So a lot of those expenses are gone, especially a lot of like events maybe starting to shut down again. Kind of sucks. But nevertheless, I agree with this. I don't think there's going to be a decline. Whether or not the moratorium ends, I think it would just help buyers because I think a lot of buyers have certainly given up. Hit a like, send me a comment, mark a note, share with your friend. How many people you know have given up? I know at least 10 in the last few months because a lot of people got spooked. Now, some people don't want to, some people think that there's going to be some magical correction and others are okay with it. This year, I've already helped 35 families buy a house. So it's certainly very, very doable and it's very predictable. But some psychologically think there's going to be some recession or some correction. This is the opportunity right now, right? If you compare it to the last 6 months, the growth has been 25% for single family homes. I don't think it's going to be like that anymore. I don't think it's going to be a decline either. I think it will be a slight increase. So a single digit increase is a very good sign. It makes it also very predictable. Think about the concern when it comes to high growth. There's a psychological concern that people say, oh, it's a bubble. Everything is, we all know what happens. Everybody all of a sudden has this crystal ball, that comes out of their pocket. They're expert economists and experts about real estate all of a sudden. So there's that one illusion. And the other difficulty is having the required funds or being okay with the required funds for additional down payment for an appraisal risk. Now, quite frankly, there's a lot of ways to mitigate that, because you can buy up to a $2 to $3 million home, actually a $3.5 million home right now for 10%. So the actual risk of that is extremely low if you were educated about options with your lender. So there are many options available out there, but this is going to be very beneficial, because I think over time, as leases starting to get renewed again, people may say, hey, look, the market is fairly flat or predictable. Let's go back in. Because a lot of people are just renting again because they have psychologically given up. So for any of those that have psychologically given up, share this video with them, hit that like button, make sure you hit subscribe. I do this report so that people can visually see what is happening, and I will show you the data as well. So that way you can see for yourself what is actually happening. Unfortunately, I don't have your name, but yes, KKR are hunters. And that's what private equity is, right? I mean, make no mistake. They see assets that either can be a value add or it could be repositioned, and they're going to try to make an exit and make money. I mean, that's what private equity is. They're basically a massive flipper. I mean, no way about that. I mean, sure. Yeah. I mean, it's really just a massive flipper, a very premium flipper, but massive flipper. Larry, thank you so much for tuning in. Not sure what a chill W cat is. Chill with cat. She'll have no idea what that is, but thanks for tuning in. Okay, the last thing I want to cover in terms of the news is foreign buyers are avoiding American homes. Out-of-country buyers purchased only 107,000 properties in a 12-month span. Foreign buyers purchased $54 billion worth of U.S. existing homes, a 20% decrease from the previous 12-month period. Now, why is this? There are several main reasons for this. Number one, I mean, while there's people that have been more flexible to be able to buy a house basically sight unseen, it's not a majority. And of course, a majority of people also wants to be out in, they want to go see the home and then make a purchase that way. So because travel is completely restricted, yes, it made sense. You're also ultimately a little bit surprised that there's still this much volume that has happened, even though there was no travel in place. Now, in the Bay Area, there isn't that many home purchases from international places. Take a look at this. For the 13th straight year, Florida remained the top destination for foreign buyers, accounting for 21% of all international purchases. Now, I'm sure a lot of this could be, Miami has done very well. It has been open, so that certainly helps. But it also has a lot of people maybe from South America, from Europe that have bought out there. You can see California is ranked second at 16%. And take a look at the actual buyers. China and Canada remain first and second in U.S. residential sales dollar volume at 4.5 and 4.2 billion. India, which is still doing fine but hasn't done as well from the currency perspective, 3.1 billion. Now, this is not a lot in terms of the overall market. I personally don't see very much in the Bay Area of people buying. I see a lot of Chinese investors buying in places outside of the Bay Area for whatever reason. Now, it also depends on what the classification of foreign buyers means. For example, we have a lot of foreign people here, right? People on visas, people that work at big tech. I mean, a lot of people are working in these big tech companies that are not a U.S. citizen. So I think that also gets counted. So those, of course, are buying locally. There's a lot of, they want to settle down, have roots, settle down here. They have very good jobs, very stable jobs. Just look at all the earnings reports that you saw over the last weeks is crazy. So they have very, very stable jobs, very good income. They like the American lifestyle. They want to settle down here, grow their family. So it's a great thing to see. And so we're seeing a lot of that's in the area, but not so much of really foreign, buyers that are not even living here and just squatting on money or squatting on a home. That's not really happening. So I'm not even expecting or anticipating any of that going on. Bobby, thank you for tuning in. Do you expect more inventory to hit the market after moratorium ends? If you caught it in the beginning of the show, I think there should be. I mean, how can there not be, right? At the same time, how much of a meaningful impact is it? I don't think it's going to be that much. the pain in the Bay Area is very different than the pain in other areas. So I think it will certainly help. But I don't know how, I'd be surprised if it doesn't help. That'd be crazy. That means nobody wanted to sell. So I'd be very surprised if it doesn't help, but I don't think it'll be that much of a meaningful impact to start swaying the market. I think those are two very different things. And if you think about it, the moratoriums for rental properties, right? So think about where the rental properties are. Now they could be in prime areas, maybe. They could also be in areas that had more distress. So think about it. The ones that can't make the payments, are they usually in prime areas? Probably the answer is not, because if they were able to afford that kind of rent to begin with, it wasn't something that was that affected, quite frankly, with COVID. I think people need to grasp that in their head. So if you're looking at prime areas like a San Mateo County, Santa Clara County, in good areas, I think it will have a much less impact, because those rent rolls were always for people that can actually already buy a house. To be fair, those individuals that are paying the $4,000 to $5,000 a month in rent, that's not a fast food worker. That's not a service-based industry, right? That's a tech worker. That's a very well-paid engineer or even executive that is paying those numbers. So that is something to be mindful of the impact. So I think the prime areas will have a less impact, and then the places further out, maybe like the East Bay, that are cheaper, because their rent is lower, then they are more subject to more swings. And it has always been that way. Georgina, Sunnyvale seems to be stabilizing. Is that your experience? I think it's tricky. Let's go over the market update, and let's point out. Let's just jump right into Santa Clara County. So Santa Clara County, as you can see, there's 456 new listings a week, 436 contingent pending. You can see that the prices have declined. Now, August, we're a little bit early. I suspect this will be up again, but it may be lower again than July. So when I'm telling about people, the opportunities of like, it was obviously a high growth in the last 6 months, but if they look at this data, there's two ways for people to interpret this, and be sure to hit that like button. Be sure to share with friends. What's your bet? And I love to, and that everybody has their own opinion. Some will say that we'll just keep going lower. I don't think so, but I think it has declined and will stay lower than the previous highs. And so stabilizing is an interesting word, because it's just 1 month of data, right? Because it's July figures from June. I have a listing that went pending this last week at 986 Nettle. Check a look, 986nettle.com. You can see for yourself, or you can see that property. It's a 3-bed, 3-bath, 1637 square foot home. We listed at $2 million. We had 50 groups come in, 50 groups that came into that property. So, and then we sold it. We're pretty happy with the results. It's predictable. We're very, very happy. Let's just say that. And so it gives you an idea. I don't know if I think prices are a little bit stable, but it seems like the traffic is still very high, even in the cooler month of, July and August. So that's what I think. Now, Bobby, great question. Interest rates can't stay low forever. Are you seeing more home buyers in the Bay Area opting for fixed interest rates for their mortgages? It's case by case. Most people are opting in for a 30-year fix. I mean, because if you're a betting person, it's hard to bet like over a long period that it'll stay this low. So why take that risk? And it also depends on the spread, right? So, the spreads are all affected every month, basically, where sometimes a 7-1 ARM, which is an adjustable rate mortgage, is very low. Right now, you can get a 7-1 ARM for like 2.25%. Crazy. And that's locked up for 7 years. Make no mistake. So the thing is, are people going to stay in that house for 7 years? If you're not going to stay in your house for 7 years, it's like a trade up, or it's like a condo townhome, and you're going to trade up, I would argue probably it's not a good idea to get a 30-year fix. Save that 0.5%. Save that 0.75% a year for that next one in the future, right? If you're going to use it as a trade up. So it's not a black and white answer. But if you were going to stay in it for, indefinitely, then yeah, why not? Go in at a 30-year fix. So it does depend on the spread. Sometimes the spread of like a 30-year and the 15-year is not that much. So sometimes it could be like 0.25% off. So it's all depending on like what are the available options, what is the time horizon that one is looking for, and then people will make a decision from that. But yeah, most people are they may not trade up, they may trade up, they may not trade up, they may also just use it as a investment property in the future. And so with that in mind, they just elect for a 30-year fix. Why not, right? I mean, 2.75, 3%, 3.25, incredible figures. So it works very well. All right, let's talk about the data itself. San Mateo County, new listings, 195, 175 contingent pending. Look at the figures, right? So as we ended July, you can see the prices have declined from June. Not much, but it has declined a little bit. But it is still the second highest month of the year. We'll see how August plays out. I don't think it's going to be these low figures. I think by next week, we'll have kind of half a month of data. We should see this pick back up. My guess is going to be a little bit higher than May, either flat or if not a smaller decline in July. So a great sigh of relief. But look at condos and townhomes, right? Different story. It had already declined in June, in July, and now probably in August. So for those that want the opportunity to lock in a place, hard to argue, a good spot. Especially the key is there's been a lot more delays about returning back to the office, which is a very important opportunity for those that want prime areas. Because the thesis was, if you can see back in last year, as you can see all the way to December, it was very dim, right? Just look back at the news articles, look back to see COVID cases. COVID cases spiked during the winter timeframe. So if they spiked during that time, people were very afraid and didn't want to be in these prime areas because they probably didn't have to go to work. But as things have become vaccinated, things have started to open up again, then you can see the change in San Mateo County. Every county is different. So for those that wanted the opportunity, hard to argue a better time. Don't say I didn't warn you. So, but as you can see, the story is very different for every county. It's like Alameda County. Even throughout last year, it didn't decline. It stayed relatively flat for medium prices, but as things open up, still continue to do well, just like every other place. You can see the remaining time has been relatively flat, though. So Alameda County has been very predictable as to what homes will sell for. Just compare homes that have sold in the last 2 to 3 months. It will likely sell for something similar. So be mindful of that. Very predictable, very easy for appraisals, very, very easy to see. Next one, San Francisco residential. San Francisco residential, single family has declined. As you can see, it declined in July. So the story is all kind of the same everywhere. I don't know if it is the same with the rest of the country. My guess is it probably is. But most areas had their spring season. Summer tends to be the third month in terms of prices. Fall is usually the next month, and then winter is usually the last. But it gives you an idea. Like, it's very predictable. So for anyone that keeps saying the market is crazy, I would argue it's dropped already. Get updated with the news, understand the data, and see where things are at. Bobby, on the topic of condos, do you have any insight on property appreciation rates for condos in the Brisbane, South San Francisco area? In general, Bobby, condos do not appreciate as well. To give you an idea, the long-term appreciation of basically, in general, as assets, it's about 6 to 7% a year. And this was the data over the last 4 decades. Single family does a little bit better. It's kind of skewed on the higher end, maybe about 7%, 8%. Condos would be on the far low end of that, maybe about 3 or 4% over a long period. Condos have not done as well over the recent times. However, the caveat for most people is not necessarily about the investment asset of it, is because fundamentally, I think people need to understand. They need to understand. That it's a lot lower to enter in the market. So, for example, South San Francisco, I have a couple of clients that bought a place in the Linden. Great place. Those are brand new condos, and there are no other new condos that have come up, right? And those condos can go from, I think, like 800,000 to 1.2 million, maybe 1.3 million. And so those are a great location. And I'm very bullish out of South San Francisco because of obviously all the things that are happening with the biotech scene at Oyster Point. So on one end, it's about the location, and it's about convenience, and it's also about you're getting in on a much lower amount. For South San Francisco, for a single family home now, it's like 1.3, 1.4 for 1,000 square feet home. And so, do people want to, and it's an old home. Those are like, they're decades old. So do people want to be in that? That's the trade-off. right? So it's not as simple. It's the question is, if you had the money, it's ideally to buy a single family home because they don't build that anymore. It's highly desirable and it will always be desirable because of the land. But condos and townhomes are not bad options. They will still appreciate over time, just not as much, but they will appreciate over time. So it's a good starting point for many, or it allows them to get into those areas because, as you can see, there's a price range and band for every city and different asset classes. And if you can't fit in that band, you're not going to live there. It's very, very simple. So that hopefully helps. Last but not least, when it comes to San Francisco, we look at condos. There's not much townhomes. We look at condos. You can see it had picked up quite a bit to June. July was a little bit lower, but same story throughout. Let's just wrap up with one last one, which is Contra Costa County. Contra Costa County followed a little bit of the other ones. They declined a little bit earlier. You can see June figures were less than May, and then July is a little bit less as well. So we're seeing this happen across the board. Now, we will see what happens moving forward. I will share my prediction. I think it's going to be flat than anything else. I think it'll be flat. I think it's still going to be case by case. Like, for example, I had 4 listings in July. All of them sold within 1 week. The traffic was good. We had about, for most like single family houses, had about 40 plus groups for each one within 1 weekend. For townhome, that townhome we had in Fremont, we had a crazy amount of people. So that's different. In Fremont, we priced it pretty low. We had 90 groups come in, 90 groups come in. So that's a little bit different too. And then my condo in San Jose, we had about 20 groups come in. So you can see there's still a decent amount of people. Each one pretty much had multiple offers. So it's still active, but I don't suspect things will be crazy. So it's important for both sides, right? If you're on the buy side, share with your friends, right? Have them understand if they've given up, this is the time to come back in. Very predictable. I mean, look at the data yourself. Just share this with them. They can easily see for themselves. Very predictable as to what we'll go for. No need to be psychologically having like PTSD and being spooked. A lot of people have had that. So that's why I do this report so people can see that. And then if you're on the seller side, it's important not to be greedy, right? There's plenty of buyers still. Let the market dictate. Let the agent like myself help you skew the band of prices towards the edge. That's my job. That's the whole value of how I've been able to help 40 families this year is I will help you skew the edges on both sides, on the buy side and the sell side. Everything's on the band of prices, but a talented agent like myself will help skew it either way. And so, but at the same time, it's having realistic expectations. You can't be super aggressive like you can in the past, where regardless almost of what price you put it at, you'll get even people to overbid. Now it's very important to understand, be conservative with price, get a lot of traffic, get a lot of people interested, market it well, position it well, and you'll still have a very good outcome. But it's important not to be overly greedy in this environment. Well, I hope this was helpful. Thank you again for tuning in to another episode. It means a whole lot to me. I've been doing this for a year and a half now. It's kind of crazy looking back at things. If you or anyone you know has any questions about the real estate market, please be sure to reach out to me directly. If you're watching on social media, just DM me. If you're watching this on YouTube, my contact details are below in the description. And of course, if you like this video, be sure to hit that like button, hit subscribe, and I'll see you at the next video. Bye now.